You have long flagged the dissonance and the growing dissonance between the U.S. and China, especially when it comes to tech. So the moves emanating out of China over the past 2 weeks, has that changed your view at all?
Well, it's really interesting. It may be surprising to hear me say that. Actually, I think what's happening is a good thing, because what the Chinese government is now doing is cracking down on the big companies that dominate various sectors at the exclusion of smaller companies. So the regulatory crackdown is probably in the long run going to be good for the Chinese market, because these companies are not going to get dominant in particular fields, and they will allow other companies to come up. So there'll be very interesting pickings in the smaller and medium-sized companies. So I don't see this as necessarily a very big negative. And I realize that the uncertainty of further crackdowns in certain areas is a problem. But in the longer run, it's probably a good thing.
So, Mark, would you be putting money to work right now in China?
Yes, we have money at work right now in China. We will continue to look at China. Of course, India is our biggest allocation now, but China is second largest. And we think there's going to be great opportunities in China. And of course, this downturn provides buying opportunities in certain areas.
Mark, what are those certain areas? What exactly would you be buying right now?
Well, it would be in the tech sector, not the big companies, but the smaller companies where the crackdown is having a beneficial impact on them, where they're going to have room to grow and not be dominated by the Tencents or the Alibabas of this world. So it's going to be very interesting the way this works out.
So, Mark, I hear what you're saying. So, okay, so you crack down on the big dominant guys. Therefore, there's more room for the smaller guys to move up. But isn't your investment naturally going to be capped if those smaller, mid-sized companies can't grow to the size of, say, what an Alibaba and Tencent was?
Well, you know, it's interesting to see some of these medium-sized companies in China growing at a fast pace. And don't forget, Alibaba and Tencent were small companies. So there's a chance for these smaller companies to come up and grow at a good pace. By the way, the other area I'm interested in is the medical side, because the Chinese government has cracked down on medical costs. And that's going to be beneficial for some companies, of course, disadvantageous for others.
Interesting. Yeah, what are the areas you see? Because clearly the Chinese government is being active in terms of these markets. You have healthcare. What else could you see be impacted by some of these regulatory crackdowns from China?
Well, obviously, indirectly, the consumer sector is going to be hit because the big companies like Alibaba and Tencent and so forth have dominated the payments area in those consumer sector names. And now these smaller companies will be able to do their own payment systems and have freedom to move from one payment system to another. So that could be beneficial for some of these other companies.
Mark, do you think that there's another sector in the crosshairs?
The other sector, believe it or not, is education. And I know there's been recently a crackdown on part-time education and that sort of thing in China. But again, whenever you have a crackdown like this, other parts of the sector benefit because they're not having competition. So I would say education would be another area to look at.
Mark, I do have to say, sometimes it feels a little less consensus what you're saying, that there are lots of opportunities in this market sell-off. You have Cathie Wood, for example, over at ARK, reducing dramatically her China exposure. Do you think that a lot of these people who are exiting will find their way back to the market, or do you anticipate that this foreign outflow is sticky and is unlikely to return?
It's not going to stay out for very long. It's not very sticky. Simply because China is so big. There are thousands of companies listed in China. It's a tremendous economy. There's no way that any global investor can ignore China unless there's a complete embargo by the U.S. government against China, but that's very unlikely.
Yeah, that's what I've been hearing too, that like you just have to own it in some capacity to find out how and why. So in the meantime, you've been in emerging markets for a really long time, so 10% correction is like nothing for you. Well, how much more downside could we have, though, before we see some stabilization?
You'll probably see another 5–10% at most, but you're going to see these corrections along the way. But people are going to begin to realize that these crackdowns are not necessarily all bad for all companies. So we have to watch this very carefully and look at which areas, which companies are going to benefit, not be hurt.
Mark, if I may, I want to pivot away from China for a moment because another asset that's seen a lot of movement over the past couple days is Bitcoin, getting a bit of a boost from Amazon, some rumors there that they might be accepting the cryptocurrency. Bitcoin at the moment trading just under $40,000. What do you think the next move is? Is it higher for Bitcoin or do we see it continue to break lower?
I'm afraid it's going to break lower. I hate to say this because I have a lot of friends in that space, but I don't see how the enthusiasm about cryptocurrencies can grow in this environment because you're going to see governments more and more cracking down in this area. And you can see the Bitcoin companies that do the trading are beginning to hit as well, which is why probably a lot of them are rushing to the market in order to catch the opportunity.
Mark, let me put on my bull hat, because sometimes the fundamental thesis for Bitcoin is very similar to that of gold in that there's just a finite amount of supply, there's going to be a lot of demand, and that's what a lot of the bulls point to, that like no matter what kind of regulation comes down or what kind of government oversight comes down, that in essence is the bull thesis. You may buy it with gold, so why not Bitcoin?
Well, I think the question is this. Right now, there's so much money sloshing around, particularly in the U.S. You know, people are getting checks in the mail from the government. They're adding to their bank accounts. They don't know what to do with their money. And when they hear these rumors, there's a lot of speculation about Bitcoin. And you hear about the billionaires that have been made with Bitcoin and the other cryptocurrencies. They get excited and they go in. It's a matter of faith. So what I'm saying is that the faith is probably going to begin to break down. And of course, you can't compare. Hey, I could wear a gold watch, but I can't wear a Bitcoin.
That is a very fair point. I don't think anyone's mastered the art of wearing Bitcoin yet, at least yet, Mark. Yeah, exactly. But Mark, I wonder if you look at Bitcoin that way and you're worried that the faith won't stick around, that it could potentially mean a lower move. How do you then approach companies that own Bitcoin? Does that alter your view and the attractiveness of them? Tesla, for example, their fair market value holding of Bitcoin dropped in the past quarter in their earnings. So are you more hesitant towards these types of companies then that have the cryptocurrency on their balance sheet?
Definitely, I would be very, very cautious with these companies. The fact that they're buying these cryptocurrencies is really, I'm really surprised that Tesla's doing that. And I'd be very leery investing in such a company.
Hey, Mark, before we let you go, you mentioned that India is obviously where you're putting most of your money right now. The IMF just cut India's growth forecast for next year to 9.5% due to the Delta variant and due to the pandemic. It's kind of a twofold question. What's your outlook? Where are the opportunities, and what do you need to be selling right now?
Really interesting that they've come up with a 9% growth. That's really quite amazing that they have this high growth. I didn't expect it to be so high. So that in itself is very positive. In India, we're particularly looking at infrastructure-related companies, you know, companies that make equipment, pipes, wires, that sort of thing. And of course, medical testing is very important because everybody needs to get all kinds of testing for the various viruses that are running around. And in the other area, we like the consumer-oriented, particularly those consumer names related to the internet. In other words, internet selling and buying. That's growing very rapidly in China and in India.
Okay, so that's your view on India. I'm wondering what you make of gold. You kind of touched on it a bit earlier. Does gold become attractive at these levels where just under 18,000 about on gold, 1,800 rather on gold futures? What do you do with the asset at the moment?
I think you have to accumulate gold when it dips down because in the long run, it's a very good, solid thing to have in your portfolio. But I'm not recommending a huge part. I'm saying maybe 5%, 10%. And by the way, in physical gold, not gold stocks, not gold ITFs or whatever. I think it's important to have physical gold.